So the conclusion, again, whether it's the effect of QE3 or other local or regional factor, condition here still favor property price to rise for the rest of this year and next. So on a separate but related point, prices can be further boosted by the developer optimism, who because of instinctively responding to QE3 bid more aggressively for land. Now this land cost push factor again will be layered on top of the price increase highlighted earlier, mainly from the impact of lower interest rate. Fortunately, of course, there is a fear of this concern of policy intervention, where it may work to sterilize or temper developer optimism. So in leaving just the interest rate to work on the end product prices. Alright, so this is unfortunately a policy issue and thus is unpredictable. So on balance, until there are other policy that is enacted or creative mechanism, okay, we expect the price to be still biased on the upside for the rest of this year in 2013. Okay, so this is predicated on interest rate here falling further in response to the continued liquidity injection of QE3, and that this interest rate decline is passed on to lower borrowing costs. I think we all know that the market itself at this point, at this juncture itself, unless you hear something very drastic, I think what has been said has been said. Alright, they can quote whatever price is crazy and all that kind of stuff. But we all know, I think I show you the 10 years chart of the stock market. Singapore has progressed so much in terms of capital, GDP per capita, in terms of our median income. And you see the asset prices has been moving, and we have low unemployment rate. But the point is that the interest rate is, the stock market index is still at 3,000, hovering around there. The only reason I can attribute why it is still not moving is because our market capitalization is small. Okay, we are something very small compared to London Stock Exchange, compared to New York Stock Exchange. But having said that, if you look at it, the thing doesn't correlate, right? If the stock market is going to be a barometer for the economy, I think you can see because of the liquidity, there are only few asset classes. So one of the big areas that they want to go in is they may pump into stock market again, and there's a well effect if the stock market were to continue to move. Next year, 2013, if you're going to see the 3,008 being surpassed. So at that point, I think then the bear analysts will have a lot of things to say. But we all know that when market moves, that if you keep focusing on the part and without being very objective, where you're just expecting it to come down, you say it just for the sake of saying that it come down, I think it will never work. If you look objectively from all the other angles, we are saying that this property market, alright, is based on what people, there is of course sentiment change and all that, but ultimately it's the liquidity and the interest rate we all know. It's still going to continue to stay very low. Okay, I'll pass the session to Brenda.